And it's a brand new week. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. Great to have you and happy Eid celebrations to our Muslim brothers and sisters out there. First of all, let's take a look at the markets now. We see the Chicago corn futures climb more than 4% today, extending previous sessions' rally on concerns over global supplies and strong demand. Well, wheat rose to its highest since late June. Soybeans jumped more than 1%, rising for a fourth consecutive session. The most active corn contract on the Chicago Board of Trade, CV1, rose by 4.2% to $6.49 for half a bushel as of the early trade. And wheat, WV1, added about 2.5% to $9.14 a bushel after hitting its highest since June 30th at $9.40 a bushel. And oil prices were unsteady today, with Brent trading higher on supply concerns, while West Texas Intermediate dipped as traders balanced supply concerns against worries about a recession or China's COVID-19 curbs hitting demand. Brent crude futures were up by 11 cents at $107.13 a barrel in early trade, adding to a 2.3% gain on Friday. U.S. WTI crude futures, however, slipped 15 cents to $104.64 a barrel, pairing a 2% gain from Friday. Trading was thinned by a public holiday in parts of Southeast Asia. Both contracts posted weekly declines last week as the market was dominated by worries that rising interest rates could curb inflation, would spark a recession and dent oil demand. And the Manufacturers Association of Nigeria have asked the federal government to issue its members licenses to import diesel from the Republic of Niger and Chad. In a statement, the Director General of MAN, Mr. Segun Ajayi-Kadir, says the move will prevent the paralysis of the manufacturing activities and that could arise from a total shutdown of production operations. The demand by the manufacturers follows the record increase in the prices of diesel, with negative consequences for manufacturing sector and the economy at large. And after the break, we discuss population. As the world celebrates World Population Day, we discuss the realities of Nigeria's growth rate. That's in a moment. Do stay with us. This is Business Morning. And it's World Population Day today, 2022 celebrations. The world population is growing fast and is expected to reach 9.7 billion by 2050. This increase in population will have a huge impact on the planet, both environmentally and socially. And back here in Nigeria, with a population of over 200 million people, happens to be the largest country in Africa, the largest black nation in the world, and the 7th largest country in the world, in terms of population, with an annual percentage population growth rate of 2.5%. How will this growth rate impact the Nigerian economy, and what can be done to cater to this growing population? Let's have this conversation now with Ayodeji Onigbogi, partner at Escrow Wealth Investment Limited, joining us right here in the studio. Great to have you.
Yeah, morning.
Yeah, so considering the economic realities, facing us right now with insecurity, child mortality rates, inflation, and all these headwinds, we're seeing at this time, and looking at our population, how sustainable is this growth rate for Nigeria?
A 2.5% growth rate in our population, considering information that we have from the 90s. It has gotten to a time whereby Nigerians, we need to slow down, because currently childbirth female is about 4 to 5. And if you continue to grow at that rate, in no time, we will double our population. From information that we know, by 2050, Nigeria would have gotten to a point whereby our population will be giving us some challenges, because we'll have gotten to 400 million.
That's a big number.
By 2050. So if we are not careful, if 200 million people were complaining of food scarcity because of various issues that we're having, by 2050, we'll have doubled. And by God's grace, by 2100, that's if we are still available here, we will have gotten to over 700 million people. So that's gone to a point whereby Nigeria, we need to reduce the way we grow. Even countries like America, countries like India, countries like China, they are even now trying to decrease their population, because they've gotten to realize that in as much as population is a blessing, because you need people to work, but it's going to get to a point whereby you need to reduce people that you have around. And one of the things that Nigerians, as a people, what we need to do is the government needs to sensitize the people the need for us to reduce our population.
What do you think will be the ideal number?
Well, I can't say, I wouldn't say this is the ideal number. In America presently, the ideal number of women per child is about 2. In China is about 2. In India is about 3. In Indonesia is about 4. But these are other countries that had a lot of population. China is leading, followed by India, then the US, then you have Pakistan, you have all this, then you have Indonesia, Pakistan. So psychologically, if you look at all these countries, the countries that we might think that we want to emulate or copy is probably the America or probably China. And the two are trying to reduce their population. Because the Americans' growth rates, as we speak, they're about 320-something million. The plan for the next 2-3 years is probably they're going to just have a few 100 million people. And their own plan is they're not going to get all these people from childbirth. They will get this from the migrants. So, as Nigerians, we should start to think about how we need to reduce our population.
And you know, talking about population reduction, that's actually the theme, you know, of this year's World Population Day. And I'm also wondering, can't we leave this to nature to actually balance it?
Oh, Ladi, when you say nature, what do you mean by nature? See, the problem about Nigerians, because there are a lot of people that are jobless. See, when most of us get something to do, we have less time to do with our women. A lot of Nigerians are jobless or they are underemployed. So the only thing you can do is, after a while, you move near a woman. But when we are all engaged, there was a time I went to China. I discovered that in China, people leave their family for weeks because they've gone to work in other towns, yes, in factories. But in Nigeria, there are no jobs, so everybody's with the wife or with the concubine. So psychologically, the atmosphere is conducive for us to be fertile.
Right.
Yeah. But in other times, whereby people need to contribute to the economy, you realize that a man that's gone to work, when you are back and you are fagged out, there's nothing no attention your wives give you that you are interested because of your condition. But when the man has not done nothing from morning till night, he has more energy. So but I'm very sure when Nigerians have more jobs, when Nigerians are more engaged, when Nigerians are not underemployed, when people are naturally employed, there will be less time to really even
to procreate.
To profile our women. Because most of the reasons why we have a lot of people around is that both men and women, there is time. When we have less time, people will be less active.
So many idle hands.
Yeah, so many idle hands.
Okay, well, looking at this projection by the World Bank, you know, for 2050 for Nigeria, saying we could hit about 400 million. Is there a possibility we could actually turn this to an advantage?
Well, it's possible. That's if we have a plan, a development plan. In Nigeria, we will discover that in 1960, Nigerian population was about 45 million. By 70, we were 54 million. By 85, we were 91 million. So that shows that within a space of 10 years, we move astronomically. We should realize that even all those time I'm talking, is not this difficult as the Nigeria we have now. So people need to know that the economy, its current situation, does not warrant us to have more children.
There's so much biting the disposable income.
See, people like us, I went to a private school, but I remember then there were a lot of people that went to public school that are even far better than I do now. But now there's no even public school that you can vouch for. So everybody, at least if you know the value of education, you try to send your children to private school. Then if you look at the cost of private school, an average private school in this neighborhood, probably it goes for part-time, probably they go over 300,000, 200,000. If you are talking of the Ikeja, it goes to 1 million. How many? Then let's look at it. What is your take home? They're able to afford that sacrifice on your child. So you even discover that most of those people that have more children, they care less about them. And that's why they can procreate. Because if you are responsible enough, you know that anybody you bring to Mother Earth, you must fend for them, you must take care of them, and give them proper education. Then you
know how expensive,
you know how expensive it is to maintain 1-2 kids. Talk less of 4-5 kids. So,
right. And you know, talking about this growth rate now, it also creates a lot of dependency, you know, on the Nigerian economy. You know, with this kind of population and this population not gainfully, you know, employed. How do we, you know, realistically make this population more productive?
I've told you, the population cannot be more productive when the existing people around are underemployed. I've already told you, if Nigerians are, if you have an employment a rate whereby over 80% of people that are employable are employed, there'll be less activity with women. People will have more time on their job. But as I speak, if Nigeria has a population of over 220 million, out of this 220 million, we have about children that are more than half. The people below 18, they are more than half. Then you have the aged, probably another 10%. So you only have minimum of 20 or 30% of that quantum that are working, that should be in the working class. And I tell you, out of this 20 or 30%, less than 5% have job that you can call job. Because if you leave here and probably go to Ikeja and you come back with 20,000, I don't even know what that can take. So I don't think that's a job. So when I say job, I mean job. So it is the 5%.
Many are entrepreneurs these days.
No. What makes people to be entrepreneur is after you leave your formal job. Right. When you don't have anything to do, you say you're an entrepreneur. Most entrepreneurs are underemployed. You know, this is a country whereby access to facilities as a loan, you don't have it. You cannot get your brothers, your sisters to help you because they too, they are not surviving. In European countries, in America, people have family pool of funds. People have investments, bonds, in other things. Very few families in Nigeria have things that people can fall back on. So once you don't have, you don't have. There's no family support. There's no friend support. There's no support. Government don't support. Everybody knows that if you go to the bank and you take a loan, if you are not careful, that might be the end of your existence. So everything is harsh. So because things are harsh in this country, what we need to do is to systematically ensure there is employment. When there are people working, they will have less time for such activity. When people are working, they will even value money more. There are a lot of people in Nigeria now that they depend on what people give them. But if you are working and you know what it takes you to make a 10 naira, you value the 10 naira more than someone that's been given the 10 naira.
All right, but what do you think, this is a pre-election year, we have elections coming up next year. What should the next president be tackling, you know, right now, or when they get there, to make sure that this population growth rate, we bring it to a good level and we can have, you know, gainfully employed population? Okay.
I think what we have to do is, you know, in this country we have the Christians, the Muslim, and the traditionalists. I think it has gone to be, and Nigerians believe so more in the heads of these institutions. For example, the Christian community, they are prelates, they are GO. People believe more in them than even the Mr. President. People believe more in the Imam. People believe more in their leaders. The leaders need to start sensitizing people why we need to reduce childbirth by women. Because see, if we don't get these things done from where we can manage it, it will still be children galore. But if you can reduce it from our beliefs, because some people will tell you that no, my mother gave back to 5, so I must give back to 5. It's wrong. The mother gave back to 5 when Nigeria was very good. I'm not saying Nigeria is not good now, but the way we see things, we should be practical. So we need to reduce our sizes, and we have to start from the heads of our religious beliefs. Then they give people, so because if you don't do it from that way, if government starts to now make jingles, publications, people will go against it because that's when they will tell you that their religious belief does not support. And they should understand that bringing a child to the world is just one night. But fathering that child
it's a lifetime.
Is a lifetime. Or even not just a lifetime. For anybody to train a child from primary to the university or to technical school, at least you are going to do another 20, 25-year program.
Right.
Just for a mistake of a night. So you need to think twice. If you cannot do it, please don't do it.
Exactly. All right. Looking at our gross domestic product, grew by 3.11% in the first quarter, of 2022. That's a little above our population growth rate. So, what GDP would you say is ideal to actually cater to this growth rate we're seeing?
Yeah, when we talk of GDP, you can benchmark it with. You don't benchmark with the growth rate because our growth rates, our debt rates, we need to match everything.
Right.
Our growth rates and debt rates and fertility rates, everything must be considered, not just the growth rates. For the GDP, what the benchmark I will be looking at probably somewhere above 10.
Above 10%.
Which is going to take a while. Because Nigeria is a mono-product economy. What everybody depends on now is still the petroleum products. But the government needs to expand our source of revenue to the extent that even human capital is a source of revenue in some countries. Yeah. We need to expand it, get people that are productive. There's no big deal moving to ICT. India as a country have a lot of personnel that what they only do is they make money through the ICT and they bring in funds into the country. There's nothing stopping Nigeria to, it could be a 20-year program, a 10-year program, but what we have to do is, let it be compulsory. Let me say in the university, in the secondary school, people must learn ICT from the grassroots, and we should ensure that what we are trying to build is, between this and this year, we want to have so many IT technicians so that they can write programs and do things. Even, it might be that government might do it by subsidizing the costs. If the cost of normal admission to read other courses is 10 naira, government will say, okay, if you want to do ICT, probably you do that for 5 naira. And that will make people to do it because we know that we have a plan in the next 10 years, the next 20 years, that we get there. Because government should not just look at raw materials, mining. Human capital is something, yes, something tangible.
Okay, get more finished products.
Finished products from
at this point. All right, well, the Happy World Population Day, I guess. That's
what we have. That's what we have now.
Thank you so much, Mr. Ayodeji Onigbogi, partner Escrow Wealth Investment Limited. It was great having you on the program.
Same here. Thank you, Ladi.
All right, so after the break, we'll take a look at the state of consumer demand as inflation and shrinkflation bites. That's in a moment. To stay with us. Welcome back. Now to our next conversation. With rising global inflation squeezing incomes, household and consumers have had to deal with a whole lot of constraints, in Nigeria. Let's get a sense of consumer spending habits and expectations for the remaining half of the year and what retail can do at this time. Joining us now is Francisca Odejiko, marketing professional. Join us right here in the studio. Great to have you.
Thank you very much, Ladi.
So, a year ago, maybe I take to a supermarket, maybe about 20,000 naira, and pick up some grocery items, essentials. And now I'm having to spend double of that. And there's been talk about the word shrinkflation, yes, going around at this time. How are you seeing it?
Shrinkflation, as it's called, is a mixture of shrinking and inflation, basically. So companies have decided to use that as a strategy to, to cut cost of production, basically. So I feel like it's an unending strategy. It's nothing new. It's been there, although not legal.
Right. Not legal.
But in the business sense, it's a bit legal because, I mean, you know, with the rising prices of raw materials, the currency devaluation, I mean, businesses will have to look for ways to cut costs or at least put some weight on their consumers.
Right.
Yeah, so that's basically how it's going. And I think for we, the consumers, we have to either
look for cheaper
alternatives or we just buy.
Or you
currently
just
we
leave
just
it alone if you can't afford it.
Well,
and that also has an effect on, you know,
it has
the producers. But, you know, I want you to give me, you know, a sense of the state of consumer demand right now. Is it still healthy?
Is it still healthy?
Right.
Are you asking
Or is
me?
it healthy?
It's not. It's not. You know, first off, you have to look at the purchasing power. You know, so purchasing power is when it's how much a unit of currency, you know, can buy a product or service. Now, when you look at our naira, how much, you know, can we afford with our naira? Say 1,000 naira. Currently, bread, I think bread is like the popular, you know, food. We can't use, I don't think in some supermarkets or supermarkets, we can't use 1,000 naira to buy bread anymore. You know, so...
especially those really good ones.
Yes, especially those really good ones.
Right.
So now we have to say, I'm saying that consumer demand is currently not healthy. It's our purchasing power is basically eroding. Consumer demand is my goodness.
So how
it's painful.
Right.
It's painful because we cannot say, oh, this product is available, I can afford it. You know, so we can't say, oh, I have to, you know, get this one and still get this other one. Currently, we do not have a purchasing power. It's very low. It's at the minimum. It's at the lowest. So we can't say we have a demand.
Right.
We don't have any choice as it is right now.
And you know, talking about demand at this point, how are the retailers actually navigating all of this and still, you know, making sales? How are you guys marketing the products at this point?
Okay, so for the organization that I work with, we run promotions, we run discounts. So customers, you know, we push those things, you know, for customers to see that, okay, yes, we understand that prices are high now, but we are going to refrain from getting this margin or this profit and still give you, you know, at a lower price. So you can see, say, 30% discounts of product. You can see 10% of the discounts of product. So that's basically how retail is going now. So the freebies, the promotions are what we are trying to, you know, implement for consumers to at least have a choice, you know, and have the ability to purchase most items.
And how are you guys managing, you know, customer satisfaction, you know, at this point? Because, you know, there've been talk about, you know, consumers, you know, complaining about the, you know, service and all of that. How are you guys managing that?
You know, first thing first, customer service is the backbone of customer retention and loyalty. You know, regardless of what the economy is saying, regardless of what the environment is saying, you as a business need to understand that your customers would at least come first. You know, without them, you cannot make sales. So customer service is the pinpoint. So you have to, you know, be efficient. You have to be reliable. You have to let your customers know that, oh, they are welcome, you know, even while they are grumbling concerning, you know, your prices and everything. So at the least, your environment, your business environment have to be welcoming for them. So that's basically it.
And you know, obviously, with a squeeze, you know, on disposable income, the retailers have to do more, you know, at this point. What are your recommendations, you know, for them to actually scale, you know, at this time and, you know, keep business going?
Okay, so, you know, currently the world is moving digital. So for retailers now, You could, like when during the COVID-19, we saw delivery services increasing and all of that stuff. And, you know, some retailers, you know, sort of reduced it when, you know, the lockdown was lifted. I feel like retailers it should still be part of, you know, business. Fast delivery, you know, fast reconciliations, you know, responding to customer complaints early, you know, accepting feedback and as well as implementing it almost immediately, especially those that, you know, are hurting your customers. You have to listen to your customers. You have to also listen to your environment. You know, what are you doing to make ease of, you know, doing business with you easy, you know? So those are like sort of things that, you know, could be implemented for retailers to scale, yeah.
And how are you guys managing, you know, this rising energy costs? You know, diesel is not what it used to be.
Yes.
You know, at this point, how are you managing your supply or your energy mix at this point?
Honestly, it's not been easy. You know, not to share confidential information, but it's not been easy, you know, because you're making profits, but that profit is going back into buying diesel, trying to run, say, 5 or 10 stores at a time, and, you know, your diesel, when, you know, the light situation is not friendly, you're just like, what can we do? But honestly, it's not been easy. That's all I can say. It's not been easy. It's not been fair to us.
I'm sure you guys will have to use solar. And, you know, most of all these other...
Yes, that's basically the new thing now, solar. But even solar is not cheap.
Right.
I mean, to put it in 5 to 10 stores, it's not cheap. So you're still going to bring out from that little profit you've even managed to make. So it's not been easy.
It's not been easy.
Yes.
I can imagine. But looking at, you know, consumer trends, you know, right now, what's your, you know, outlook for, you know, consumer behavior for the rest of 2022?
Consumers would. I'm a consumer. Right. You're a consumer.
We're all consumers.
We're all consumers. So basically, we would focus on, you know, the essentials. Like I said earlier on, our purchasing power is being eroded. So our demand, you know, cannot even be as high as possible, like as before, you know. So I feel like consumers are going to mainly focus on essentials. They won't be able to, you know, buy the extras anymore. Everybody is going to go into a retail store or a supermarket with one list, and they're coming out with that thing in that list. There's no time to say, oh, I might need this tomorrow. There's no time for that. Then I feel like consumers, or say your customers, would expect that with the environment that is, you know, currently hounding on their purchasing power, they would expect reliable services. They would expect an efficient customer service. You know, they would expect that this organization that I'm coming to patronize, this organization that I'm coming to buy something from, would treat me well. At least, you know, if not, I mean, I hop on to the next person. Also, consumer loyalty or brand loyalty or advocacy would help in sales, because, you know, the level of customer satisfaction over time, you know, would guarantee, you know, if they are consumers, we stand with them or stay with them.
Right.
So, yeah.
And, you know, talking about customer loyalty, you know, at this point, is there any loyalty? You know, what options do consumers have at this point?
Honestly, I feel like there's still, I mean, the brands that have, you know, effectively stood by their customers over time would definitely still have their, you know, loyalty, their core customers still coming in, regardless of the fact that prices are on the increase. They will still have the option of saying, oh, I'm going to still go to these people regardless, because they have given me the best over time.
Right,
So,
and I just wonder how much limit, you know, the average consumer, you know, has out there at this point. That's those are major discussions, you know, people are having. You know, how far can the consumer go with these rising prices? Let's just hope inflation peaks, you know, at some point, and we can get back to normalcy, you know, by God's grace.
Hopefully.
All right, thank you so much, Francisca
You're welcome, Laddie.
marketing professional. It was great having this conversation with you.
Yes, thank you.
All right, now let's take a look at what's happening with the markets. We have Will there. Will, we saw a new low, over 1%. That was quite unexpected. How are you seeing it?
Ladi, good morning. What we are seeing is something I've not seen in a long time. I've not seen in a very, very long time. And it is said that it is the second worst quarter of depreciation that the Naira has recorded since ever. So it's something that we don't know how the central bank is going to work on to see how the Naira stabilizes, but possibly after the holidays, we'll see how this week will pan out. Now, but last week, Nigeria's FX reserve recorded another increase, growing by over $170 million week on week to $39.34 billion as of July the 7th. However, activities at the forex market was mostly negative, as the total turnover of transactions carried out at the FX spot and futures derivatives market fell by 23.62% to $581.24 million. Now, a further breakdown of this result, we saw that the FX spot, which is the I&E window, fell by 17.85% to $505.66 million. Now, this is something that we're just wondering, and the I&E window, we also saw that the Naira dropped further there. Now, derivatives market is also down 48.02% to $75.58 million, while we saw that the NAFEX, we were talking about that earlier, the Naira fell 1.02% to 424 Naira 45 kobo to a dollar, against 420 Naira 16 kobo to a dollar as recorded in the previous week. Now, we are seeing so many lows for the FX market, and we're seeing that fixed income space, well, it was mostly bearish sentiments, not good for the people who borrowed the money, but it's good for those who gave the money out. So we saw bearish sentiments with week closing there, and then investors, taking more profit as yields continue to trend upward. But we have Dimeji Obasa, fixed income dealer at Access Bank, to give us a deeper dive on what went down in the market last week. Good morning, Dimeji.
Good morning, Will.
Now, Dimeji, we saw more bearish sentiments dominating, taking a hold of the market, the fixed income space last week. Could you give us a deeper dive as to what went on last week?
Yes, so you're correct. We saw bearish markets throughout last week. That simply means that the market is selling to getting cash, and the reason for that is the low levels of market liquidity that we've had for the past week, with liquidity being in the negative across the market. So what we've seen is a lot of market participants selling off securities, particularly on the short end of the curve. So short-end treasury bills, and as well as, just steeping into the short-end curve of the bonds as well. Last week, we actually saw the treasury bills yield curve invert, wherein shorter tenor securities are trading at a higher rate than the longer tenor securities. So the bearish sentiment was persistent throughout the week, and we don't expect that to change coming into this week.
But analysts, so you were talking about a liquidity squeeze here, because analysts expect or anticipate more of that, and that treasury bills will continue to trend upward. Is that your take on that? Do you subscribe to that?
Yes, that's what we see, particularly in the short term. At least till the end of the month, right? The inflows coming into the system are not significant to turn the tide at the moment. So what we would expect is that market participants will continue to sell off securities to essentially raise cash. That will continue to then increase the rate, particularly on the shorter end of the yield curve. And we would also see rates in the money market increase as banks try to offer higher rates to get inflows.
Now, it's a holiday today and tomorrow. Markets are closed. Or what do we see? Are there any auctions to look out for? Something for investors to grab onto for the week?
Yes. So going into this coming week, we should have the primary market auction to be conducted by the DMO, and then also we would have the bond auction later on in the month. So those auctions would be ones to you would have to watch them very closely, particularly, this is almost an unprecedented time, given that the, markets are inverted across the yield curve. So it will be really nice to see what the outcome, particularly of the treasury bill auction will be, right? So it will be interesting to watch. Our expectation is that the auction would not see as much participation as previous auction, owing to the low levels of market liquidity. But it's also worthy to note that there are other market participants in the auctions that might still go to bid other than banks, right? So you have the likes of pension fund administrators, asset managers and co that might not necessarily be as affected by the liquidity squeeze as the banks. So it will be one to watch.
Okay, so now let's talk about a bit of the government's borrowing plan vis-a-vis the deficit that we have. As in, do you see that affecting the bond space? What do you think that will happen for this quarter that we are in now? What do you think about that? Is it going to affect the bond space, the fixed treasury bills? What's going to happen there?
Yes. So last week, the DMO released the bond auction calendar. They essentially maintained the bonds that were on auction, right? That's the 2025, the 2032, and the 2042 bonds. The amount on offer did not increase significantly, particularly for this quarter that we are going into. So as far as the borrowing plan goes, we've not seen any significant increase in the plan and the auction calendar that was released, with the amount on offer essentially remaining the same from previous quarter. So we might not necessarily see the impact in the bond market as far as the bond auction goes, but where we can see some additional borrowing might be in the treasury bill space, if the DMO would be willing to sell more securities than what is on offer to investors. That would then give an indication of what plan is for what we might expect for the bond auction and how much cash they are willing to bring into the system.
Thank you so much, Dimeji Obasa, Fixed Income Dealer, Access Bank. So, Ladi, that's what we have for the reviews, as in the market, especially what happened in the market last week. The Naira created really low, it's the worst.
New lows,
new lows, record lows, over 1%. And we're wondering what is going to happen if we're seeing it in the official markets, what's going to be happening in the unofficial markets.
The market we don't like to talk about at this point. And, seeing the greenback actually strengthening, we're seeing a lot of pressure on emerging market currencies at this point. All right, Will, thank you so much for that update. All right, so after the break, we head to London. That's in a moment. Just stay with us. Welcome back. Let's head on to London now. We have Juliana standing by right there. Great to have you, Juliana. Good morning. So Uber is in the news this morning with allegations of ethically questionable practices that fueled Uber's transformation. Tell us more about this.
Yeah, this is an interesting story. Good morning, Laddie. Spanning between 2013 and 2017, it's a report that was disclosed by the Investigation of Consortium of Journalists. They have raided through thousands of leaked files, and they have disclosed them to the BBC and The Guardian. And yes, it does look into, let's say, the beginning of Uber under its pretty controversial former CEO, Travis Kalanick. Now, he resigned in 2017 for the questions of the culture at Uber. But while he was CEO, according to the reports, he spent about £75 million every year trying to lobby politicians, because there was a time ride-hailing was particularly new. Lots of regulators weren't sure of it. But according to the details that I've read, George Osborne, the former Chancellor of the Exchequer under David Cameron's leadership here in the UK, as well as the French President Emmanuel Macron, who at the time, I believe in 2014, he was the economy minister in France. Now, the former CEO of Uber allegedly spent lots of time with them, off the record, lobbying with them, trying to get the thumbs up for Uber in those countries. And it does appear as if the thumbs up, actually happened. Uber have responded saying, of course, that was in the past, that now they make sure that they are within, regulation practices. But it is an interesting story, and it does go to show just how powerful lobbying can be and how it implicates some pretty powerful politicians. We did also hear from the former Chancellor George Osborne from these allegations, and he said, of course, if you are the Chancellor of the Exchequer for one of the most industrialised nations in the world, it is important that you speak to CEOs off the record. But let's see if this story dies or if it grows over the next couple of days.
Right, we'll keep tracking that story. So it's a new week. What market moving data should we be expecting over there?
But it is a new week. Of course, the only story everybody's talking about in Britain at the moment is the race to become the successor of Prime Minister Boris Johnson. He resigned, didn't he, pretty shockingly last week, Thursday. And so far, there are 11 Conservative Party candidates who are vying to take over him. We are going to get a schedule outlining just how this process is going to take place later today. There are 11. There can only be 2 main contenders, so it will be whittled down. So really, I think now it's about which Tory potential PM is going to cut taxes the fastest. That's what people want. We are going through a cost of living crisis, so we just have to see what happens. And then, of course, on Wednesday, we are going to get the all-important GDP data for the month of May. In April, GDP fell 0.3%. We are expecting a fall of about 0.1%. You know, everybody's screaming recession. It does appear as if we're getting that way. But yeah, it's an important, busy week in London, as usual, Laddie. But of course, we'll keep you up to date with all the top stories.
All eyes on the recession at this point. Thank you so much, Juliana. We'll talk to you at 1:30.
Thank you.
All right, now let's head on to the markets. Now we see Bitcoin there holding on to that 21,000 mark. Let's look at the fear greed index showing sentiment in the market. We see it's about 22 points. Extreme fear this morning. I also look at the market cap, now $109.67 billion. That's down about 3.60%. 24-hour volume traded in the total crypto space, $53.97 billion. That's down about 3.54%. I see Bitcoin dominance there sitting at 42.83%. That's down 0.28%. It's been in that counter for a while now. Looking at price of Bitcoin, $21,822, down 0.45%. It's looking quite weak this morning. Looks like it might fall below that 20K mark. We keep watching for data coming out from the U.S. and affecting all the markets right now. Price of Ethereum, $1,142. That's down about 0.73%. Volume traded in Ethereum, $11.69 billion. And we look at the top alts by market cap. We see it's mostly red on that counter. Talking about the top alts, see BNB there down 0.80%. All right, let's bring in Rume Ofi now, digital market analyst. Hello, Rume. Great to have you. Good morning.
Good morning, Adi. Good morning.
Yeah, I hope you're enjoying the holidays. I'm sure you have a lot of RAM there with you. But let's look at the market. Now, we see there's a report showing that Kenya is leading Africa with crypto adoption. It seems that country is not playing with financial inclusion at this point.
Yeah, exactly, Laddie. You understand the fact that a lot is going on in the world. You know, all of the popular news around Elon Musk dropping Twitter, zero COVID, and all the war in Ukraine, and inflation rate coming in Wednesday, right? And hopefully we're going to see 8.8. Africa is not left behind. They are leading, and Kenya is topping that chart about 8.5, which amounts to about 4.25 million individuals holding cryptocurrency, that is digital asset as well, not just Bitcoin, the flagship cryptocurrency. It gives some signs of belief that Africa is actually prepared for this emerging tech around the world. You know, this is very good news. In fact, even beating the US, which is one of the biggest economies in the world, it shows that the adoption rate is coming. And not to forget the fact that this industry actually, aside cryptocurrency, comes with other opportunities around the blockchain space. There are other opportunities in the blockchain space around the logistics. There are opportunities around other solutions that you can get data storage using the blockchain that you can the opportunities are so enormous. But in this case of holding digital assets, I'm so proud to be African, and I think I see a lot going on in the future.
And does it mean the regulators in Kenya are kind of friendly towards crypto?
So what happened in Kenya is that there is a blueprint which I think that the Nigeria could also learn from. They engage the stakeholders on. In fact, the stakeholders actually brought framework that the government actually, the regulators actually are looking at, or pending that they did not come up with a full-blown scale directive on how it should go, but certain rules around money laundering and terrorism funding are being adhered to. So this is difficult in a way for regulators because they are not in this space, right? Those of us involved in the space, those that these guys actually engage and say, oh, how can we do it? You guys are here. Then these guys try to advise the government, this is how it can be done. And the exchanges play a very huge role. People must go to the exchange platform to get cash. Or with Bitcoin, to their local currency. In the case of Kenya, is the Kenya shilling, right? So if there's all of this in place, with all of the collaboration from key stakeholders, it gives a clear understanding of where this is going. Let's not forget, this is young. A lot is evolving. So when you give it very hard to the space, it tends to explore other opportunities in this space that could bypass regulation. And I don't think it's good for any economy. The fact that this is done, it is making the Kenya country there attractive to investors. People will not see any reason to go invest or take their business, either crypto business or blockchain companies, countries where they have hostile regulation. And I think they are going to benefit. And I also use it as an opportunity. If we in this part of the world can come up with something of that nature that could help, because we need all of the revenue to run a country.
Right. And looking at another climb now, see lawmakers in the UK appear to be accelerating efforts to, address a hot button crypto issues there. How are you seeing that?
Yeah, the UK has actually been warming up to become, because from the head of Treasury, the Royal Highness head of Treasury there, before now actually said that they want to position the UK as the hub for cryptocurrency and blockchain. Let's not forget the fact that even the US have not seen headways in how to pull all of this together. But other countries like Singapore, even Hong Kong is doing something of that nature, putting things together. Everyone is trying to make sure that they have all of the opportunity. But now I see UK projecting, they are putting themselves out there. In fact, think about a month ago, they came up with they are going to be easing, because they came up with a policy before to say, oh, any transaction that go on cryptocurrency should be reported to certain authorities, right? The regulators. Right? But now they said, oh, let's leave it, because they understand that this is how to discourage people to get involved. So they are going to get their data from the exchange platform, from the those operating these companies in the country. There should be some guidelines. So they actually did a meeting that brought about all of the stakeholders, from programmers in the blockchain space, from traders, crypto exchange platforms. They brought all of them together to see a way to, that is the way things are done. You come up and say, oh, how can we move this forward in a way that will benefit us? It also happened in the US at a point where Sam Bankman-Fried of FTX was brought in, a lady from Seco, and a few other persons that were brought in by the Congress. How can we make this go side by side with our economy and the US dollar? That is how it's supposed to be done. And the UK is making sure that they make it so friendly, enforcing regulatory framework, and this is the way to go. If the regulatory framework is not clear, there's going to be a serious issue. And this will also improve on their GDP and create job employment.
I guess we're not going to hear the last of regulation when it comes to the crypto space at this point. There's still more talks going on about regulation. But yeah, we're seeing Bitcoin there holding on to that $20,000 mark. What's your outlook for the week for price movement?
Ladi, I must tell you, the last week closed below 20K, about 19 something, right? About 19,300. And all eye is on the CPI figures. So we're actually looking at that to be able to judge the market. Now, the market is reacting to that from last night, right? Wednesday is not far from today, and we're going to see that it's going to improve on the market. I'm seeing a situation whereby in some months we see some level of relief rally. That's my opinion. We're going to see, I could be wrong, but we see some relief rally as the months go by. What we're going to see around that worst case scenario, we'll go below 20K. We could hit a low of 17 if possible. But the
Right.
CPI is very
The
cheap.
bear market rallies still carry on in most of these markets. All right, Rumi, thank you so much. Enjoy the rest of your day.
Thank you.
Okay, so that's the market this morning. It's mostly red in the crypto space at this point. We're seeing double digits losses with quants there. Topping that count is down about 12.05%. All right, that's all we can take with the market, and that's a wrap on the program today. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.